When we think about the legacy we leave behind, we picture the memories we have created and the security we hope to provide for our loved ones. But what happens to the assets you have worked so hard to build? These moments with family are what truly matter. Yet, without proper planning, your family could face the stressful, time-consuming legal process known as probate. During probate, a court decides how your assets are distributed, tying up your estate for months. But it does not have to be this way. Today, we will explore the key assets that bypass this process entirely, ensuring your legacy is protected and immediately available to the people you love. When you pass away, your assets don't always go directly to your loved ones. Often, they have to navigate a complex legal maze known as probate. Put simply, probate is the court-supervised legal process of validating a will, paying off debts, and distributing the remaining assets. During this time, an executor manages the estate, ultimately passing the remaining wealth to the heirs. But why do so many estate planners recommend avoiding it? For starters, probate is notorious for being incredibly time-consuming and stressful for grieving families. A ticking clock is the reality for months, or sometimes even years, before a family sees a single penny. Then there is the financial toll. Attorney fees, court costs, and appraiser fees can drain a significant portion of your hard-earned legacy. On average, probate can tie up assets for 9 to 24 months and consume anywhere from 3 to 8% of the estate's total value. When planning your estate, one of the most powerful and reliable tools at your disposal is life insurance. Unlike many other assets that get tied up in legal proceedings, a life insurance policy offers a direct path to your loved ones, completely bypassing the stressful probate process. By simply naming a specific beneficiary on your policy, you guarantee that the death benefit goes straight to the people you care about most. It is a proactive step that provides immediate, tax-free financial security during an incredibly difficult time, without the frustrating delays or hefty costs associated with probate court. Here is exactly how it works. Because the policy is a private contract between you and the insurance provider, those funds are never considered part of your probate estate. The insurance company simply pays the designated beneficiary directly as soon as they receive the required claim forms and a death certificate. Just remember to keep your beneficiary designations up to date. Major life events like marriage, divorce, or a new baby should prompt a quick review of your policy. This simple step ensures your legacy continues to protect your family exactly as you intended. One of the most effective ways to secure your legacy and avoid probate is through your retirement accounts. After spending decades building a nest egg in a 401k or IRA, you want those funds to pass smoothly to your loved ones. By simply naming a beneficiary, these accounts bypass the courts entirely. This allows your heirs to access the funds without the delays and costs associated with the probate process. When you open a retirement account, you are asked to fill out a beneficiary designation form, which is often easily completed online. This form acts as a direct contract between you and the financial institution. Upon your passing, the funds flow directly to the individuals you have named, completely independent of your will. The key to this strategy is keeping your designations up to date. Major life changes like marriage, divorce, or the birth of a child require a prompt review. Make it a habit to set an annual calendar alert to review your beneficiaries. Consulting with a financial advisor ensures your retirement accounts align perfectly with your overall estate plan, protecting your legacy as intended. One of the most common and highly effective strategies to keep your assets completely out of probate court is establishing joint tenancy with right of survivorship. This is a special legal arrangement where 2 or more people hold equal shares of a property simultaneously. While it is most frequently used by married couples, any trusted individuals can hold property this way together. The true power of this arrangement lies in those final 4 words, the right of survivorship. How exactly does this right of survivorship protect your legacy? Under a joint tenancy arrangement, when one joint owner passes away, their ownership interest does not go into their estate to be distributed. Instead, it automatically and immediately transfers to the surviving owner. Because this transfer happens by operation of law, the property entirely bypasses the lengthy probate process. There are no court delays or expensive probate fees. The surviving owner simply assumes full ownership. While we often hear about joint tenancy in the context of real estate, like a suburban family home, this powerful tool is not limited strictly to houses. You can apply joint tenancy with right of survivorship to a wide variety of valuable assets. This includes checking and savings accounts, brokerage and investment portfolios, and even your family vehicles. By setting up these assets as joint tenancies, you ensure a smooth, immediate transition of wealth for your loved ones. Beyond life insurance and retirement accounts, there are other simple ways to bypass probate. Payable on death, or POD accounts, allow bank funds to transfer directly to a named beneficiary. Similarly, transfer on death, or TOD deeds, can be used for vehicles or real estate in many states, instantly shifting ownership upon death. For those seeking a more comprehensive approach, establishing a living trust is a powerful estate planning tool. It holds your assets during your lifetime and distributes them smoothly outside of probate, according to your exact wishes. To ensure your legacy is protected, keeping these non-probate assets up to date is absolutely crucial. Make sure to review your estate plan annually. Life changes quickly, so you must update your beneficiaries after major life events like marriages, divorces, or births. Finally, always seek professional legal and financial advice to tailor a plan specifically to your family's unique needs. We have covered a lot of ground, but the main takeaway is simple. Probate is not inevitable. By taking proactive steps today, you can keep your assets out of the court system and ensure they pass directly to the people you care about. Start by reviewing your accounts. Make sure your payable on death and transfer on death designations are current. Double-check the beneficiary forms on your life insurance policies and retirement accounts, updating them after major life events. While these tools are powerful, they work best as part of a larger strategy. Sitting down with an estate planning attorney or a qualified financial advisor can help you tie everything together into a comprehensive plan. Think of your estate plan as a sturdy bridge. The effort you put into it today ensures a safe and secure crossing for your family tomorrow. Protect your loved ones, plan ahead, and take control of your legacy right now. Protecting your legacy doesn't have to be stressful. By taking a few simple steps today, you can give your loved ones true peace of mind. If you found this video helpful, please hit the like button, subscribe, and leave a comment below. For more resources and step-by-step guides on planning your estate, visit funeralassist.com. Thank you for watching, and take care of your legacy.